Morning guys. Okay, so let's analyze. Welcome to today's analysis. We are going to analyze Custodian Investment Plc. That is the biggest insurance company by market cap. We also have to understand that they are diversified finance. That means outside insurance they do some other stuff, but insurance is their core business, layered on other financial services, brokerage, pension, and what have you. So this is their 2025 results. We are going to analyze it, full year audited. So for further details, you use the link down below. Go to our X page. We broke it down more. If you want a copy of the raw Excel file, you can comment down below. We'll show you the link where you can get those data. But this is the summarized analysis so that you can know what's going on. So for Custodian, this is what their income statement looks like, full year 2024 against 2025. So in 2025, the total profit grew by 23% from 161 billion to 200 billion. That's roughly 24% increase. Then for premium, you have to know that insurance companies, they collect premium. So insurance collects premium. That is what you pay. So the business model of an insurance company is underwriting. So underwriting is the business model of an insurance company. That is premium. If they collect premium, that is the charge they pay. The money they charge you is called premium. Then when there is problem, the money they pay is called claim. So for their premium, net premium end, that's when you deduct the premium from the cost of putting up the premium, and also there's what you call seeding. So sometimes they seed out some of their insured contract, that's reinsurance. So when you do the math, the remaining money they had there is, so the net premium, if you strip it out, it gives you net premium. So their net premium is at 89 billion, which increased from the previous year of 41 billion. That is, net premium increased by 46%. Then investment income, net investment. So the investment income of an insurance company is, you have to know that when they collect those claims, when they collect those premiums, they don't leave the money idle. They have to deploy it into investments, especially they invest, for some of them though, they invest in treasury, some even buy stocks and all those things, because you don't need, that is why most of the insurance company have stock, cash pile. That is one good thing about insurance. So that idle cash has to be deployed to start earning. So from that investment they made, their investment income grew by 48% from 58 billion to 87 billion. Then fees and commissions, the fees they charge in rendering their service also grew by 61%. Then FX loss, so you have to understand that this is an emerging company in an emerging market, Nigeria. So emerging market suffers from FX. So one way or the other you might see FX devaluing, that's fluctuation in exchange. So in 2024 there was 2023-2024, the CBN of Nigeria floated their currency. So because these guys have some FX, that's foreign currency, it was revalued, so they had an FX gain of 23 billion. But now in 2025, there was stability, there wasn't much fluctuation in the exchange rate, so their FX gain was just 0.1 billion, which is roughly 100 million naira. So it wasn't much. So that is why you see that decline in FX. So it shows that there is stability now in the exchange rate. Then in the expenses, their expenses grew by 20 23%. So expenses grew by 23%. It went up more because maybe you took on more bigger business. Then benefits and claims. This is where the rubber hits the road. So they paid more claims in the tune of 117 billion as against 77 billion. So their claim increased by 51%. So I want you to look at these benefits and claims which they pay out compared to the premium they earned. We still get to it, but keep your eye on that because that is where their core business is. Then in their selling an administrative cost, it also grew a little bit. Then pre-tax income, that is the income. Now if you net out all these expenses, income before they start paying tax, so the income grew by 25% in the tune of 76 billion. Then income tax, so they paid an income tax of 8 billion. Then the net profits for 2025 grew by 25%. So they made more net profits. They made more profit 2025. So let's now look at their balance sheet. After that, we now look at the key ratios that will show, key metrics that will show how the state of the business. So this is the balance sheet. So to summarize, their assets grew. So their assets is now in the tune of 1 trillion. So that's why it is one of the biggest insurance company. So the assets grew almost 151%. So their assets increased. Then the liability also increased in the tune of 194. Then the equity also increased. So this is what you look at in the balance sheet. So the asset is increasing, the liability is increasing. You just compare the pace at which the asset is increasing, the liability increasing, and the equity is increasing, and the cash. So they have a cash pile that it grew over 250 something. Alright guys, sorry about that. So we are done with the balance sheet, we are done with the cost statement. So how do you get a clue of what is happening with this business? We use some key metrics, key ratio to evaluate. So let's go. Okay, let's start with, if you look at the income statement, there are some couple of ratio you can actuate to know what is happening with custodian. So the first ratio we are overlaying is the loss ratio. So if you look at the loss ratio, it's one of the key metrics when you are evaluating an insurance business. So the loss ratio weighs the difference between the premium, the net premium you collected. Remember that premium that you have deducted, the fees of collecting the premium, that premium you have deducted the cost of insurance, because an insurance company can also reinsure. That is a kind of seed out some of its insured stuff like insuring. So it's called reinsuring. So once you get that, so you evaluate it with the claims you paid. So unfortunately, this is 2024, this is 2025. So even in 2025, their loss ratio keep increasing. That means they are paying more. They are paying more in claims than the premium they are collecting. So the benchmark for it is not supposed to be more than 85%. So this thing started since 2022. The last time, because we have been tracking it, but just that we focused on the last time they had a positive loss ratio, like that is not above this, was in 2022. Since 2023, the underwriting business model broke. But in order not to be too technical about it, so the next ratio that kept them in check, why we see they keep making profit, is this investment ratio. So you see that their investment portfolio keep on rising. Even in 2025, it rose by plus 1.76%. So they keep making money from investment. So, but structurally, their operation is still very much okay. Their operation is still very much okay. Like the cost of operation is still very much okay. Their expenses is being managed very well. Cost of running the business. But the problem they have, looking at this ratio, is their underlying business. So their business arm now is divided into two. The underlying side, which is the core business, and their investment arm. So the investment arm of the business is making up. That is what is keeping the business afloat. If not, the law of affair could have come to an end. So it is encouraging to look forward for them to start making money from their core business, which is underwriting. So one of the ways they can do that, either they should weigh the claims they are paying, check it very well, or are they taking excessive risk in their insurance? Another thing they should also do is, if they can review their premium, but I know they need to charge a competitive fee. So all those things are factors you put in the table. Another thing to note is that if you go to our X page, you explain this more. Part of this net profit, part of their net profits, yes, part of this net profit you are seeing here, this 65 billion net in 2025, they booked an outlier profit of close to 9 billion because they bought that's FBM Quest. They bought a stake in FBM Quest of close to 29 billion. When they revalued it, they made extra profit. So you can buy an asset after revaluing with the current IFRS. They made a profit, so it added to this profit. Also, it's an outlier, one of something. Then let's look at the balance sheet. So for their balance sheet, they are very much okay. The insurance business is still very much solvent, but just that the solvency ratio dropped very well from 33 to 21. What led to that is because of if you look at their keynote, you will see that there is this, the liability rose so well. One of the things that led to the liability going so well, there is this arm that had this trade and the payable. So that trade and payable was in the tune of over 500 billion. So it really affected the balance sheet, but they are still very much solvent. So that is just what happened to the balance sheet. So every other thing in the balance sheet is still intact, but it's still very solvent, still very liquid, and they are making aggressive reserve. They are making aggressive reserve for claims, which is also another factor to factor in. Then if you look at their returns on assets, very much okay, even though it dropped, which means the assets is not matching up. It's not matching up. That means the pace at which the total asset is growing is not matching up. And the next thing with the revenue, the next one to look at is the return on equity. Why it dropped to it means the rate at which the equity is growing is not matching up with the revenue. So these are some of the factors to weigh. So this is the analysis on Custodian. Comment, ask your questions. Also feel free to comment even though we have a list of analysis to do further up to show you. So you can comment, ask your questions, watch other videos, and stay connected, stay educated so that you know what you're doing in the market. So these are some of the graphics you can download. Go to our S page and download so you can see the overlaying of the custodian balance sheet here. You see the size of the assets. Now the assets is close to a tune of over 1 trillion. Then you can look at the size of their income statement, the one they made, you can see it's over 200 billion. So that is it about custodian. Catch you in the next one, please.